Once you're able to determine the direction of the market, by that I mean price movement, the action of the price at that moment, the job is already halfway done for you. Okay. The next important thing is how to master your emotions, how to control your emotions. Okay, so being a forex trader, you have to, you know, win more, like win more whenever you place a trade. You have to be confident of your analysis, what you've done so far, and winning more. Sometimes you lose because that's what the game is all about, right? Yeah, but you always have to win more than you lose. That's what makes you a profitable forex trader and a proud one at that. So, before we dive into the lessons we have for today, guys, I would want you to please consider subscribing to my YouTube channel if you haven't done that already. Just consider subscribing, share the video so it could go to as many people as possible, those that are interested in developing or growing their Forex career. Share the video, like, and subscribe. Click on the bell notification as well so that when next I post a video, you'll be among the first persons that will receive the alert. Thank you so much. So, guys, I'm going to be revealing to you how I trade. Okay, there are many strategies anyone out there can use. Okay, but today is different for me because I feel like revealing, to as many people out there who have been looking for strategies, good strategies to have more wins. So today for me, I will be letting out the four different, should I call it signs, or four different confluences that determines my setup before I take whether a buy trade or a sell trade. Okay, before I take any trade, I must make sure these four confluences, that determines my setup, must be in place. Okay, and those confluences must tell me to either buy or sell. Okay, so without wasting much of your time, let's get into business. Okay. Yeah. So at this point in time, we have a lot of pairs, both in the crypto group, the forex, the indices, energy, and all of that. This strategy works for all of them, so long as it has to do with price action, what the market is telling us at a particular time. This strategy is the bomb. It works for all of them. So, and once you're able to get a particular strategy that works for you, you need to cherish it, hold it as gold. You can use it for as long as possible. You don't need to keep trying different strategies. Maybe after trying out some strategies, you find out that maybe you discover one or two other strategies later on and probably decide to give it a try. So stick with me while I take you guys through this journey. So first of all, let me pull out my text box. So we have trend line, which some people call support and resistance. We have, for me, where I have these psychological levels that I use to determine my trade before going to the market or executing any trade. Okay, I also make use of chart patterns, chart patterns, and I also make use of understanding the different time frames, what the different time frames are saying, if they're all saying the same thing. Okay, you get to understand better. So the number one is time frames, the different time frames, understanding what the market structure is saying at a particular time. Let's be able to determine the overall market trend. So we have overall market structure, right? Overall market structure. Okay, overall market structure. All right. And number two, we have I'm trying to review the different confluences that determines my being able to get into the market at any point in time. So number two, psychological levels. Okay, psychological levels. Psychological levels. Under psychological levels, we have main and sub. Okay, um, main psychological level in brackets. Main psychological level, and of course, sub. Sub psychological level. For the sake of space, let me just do it this way. Okay, main and sub psychological levels. Okay, then number three, we have chart patterns. Okay, chart patterns. Chart pattern. And the fourth one, trend line. Okay, trend line. Trend lines. Okay. Yep. So overall market structure, psychological level, main psychological level, and sub, chart pattern, and trend line. These four things must be in check. These four things determine my setup before I decide to go or before I decide to place a trade. So the overall market structure actually is has to do with you looking at other time frames to know what the market structure is all about at that particular time, to know if it's an uptrend or a downtrend. So right here we're on 15 minutes time frame. Yeah, so on the 30 minutes time frame, the market shows that the trend has been a downtrend. Okay, if you look at the market structure, overall structure, the trend has been coming all the way from the top to the bottom, all the way from the top to the bottom. I can't possibly check with the 4 hour and daily time frame because this is mobile version of my trading view, so it's definitely going to like feel like expand so much that you won't really see the chart patterns. So for the purpose of this training, we're going to make use of the 15 minutes and the 30 minutes, probably on PC version laptop. Maybe when next I make a video, you be able to see clearly what the daily time frame and the 4 hour time frame is saying. But clearly from the 30 minutes, 15 minutes, and understanding what the chart has been like, is a downtrend. So that's the overall market structure. That's number one. The number two is psychological level. We have the main psychological level and the sub. I permit me to treat this psychological level last among the four confluences. So chart pattern, okay, and trend lines. So back to the 15 minutes time frame to enable us do better. So on this 15 minutes time frame, if we decide to rule out our support and resistance levels using our trend line, all we need to do is pick our yeah okay pick our two and draw our trend line. So basically trend line is simply connecting two peaks or trough together. By peak, I mean the two most two most higher high and higher low. It could be higher high, higher low. Two most recent higher highs, higher low, and of course lower highs and lower lows. So for these, this is the demand zone, the support zone as well. So connecting two lower lows, connecting two trough together. So for this one, two most recent, it could be two, it could be three. But for the purpose of this training, the most recent ones that we can clearly work with are these two. These two, okay? That when it comes to the support area, when it comes to the support area, and for the resistance area, for the resistance area, we also need to mark it out to see what the market is doing. Okay, so this one we can connect as much as three. Okay, as much as three. It doesn't matter even if it touches the body. What we're trying to achieve is just the zone, the area. Okay, so now over to chart pattern. We've drawn our trend line, otherwise referred to as support and resistance. Okay, so over to chart pattern. So wherever you see W, okay, wherever you see W, like this one now, let me explain. You see, the this market structure has been this way. It got to this point, or we can use this one. Can use this one. Yeah, that's it. So the price got to this particular high or peak. What happened? There was a trend line bounce. It bounced back. It bounced back, went all the way down, down, did its thing, tried as well as going back to the trend line, hitting it, but it also bounced it back. It didn't break through, like breakout. There wasn't a breakout. Then what happened here again? It also came here and did the same and went all the way down. Went all the way down. So at this point in time, if you had wanted to place a trade, you would have considered this area. Would have considered this area. First of all, a lot of areas we could have placed a trade if you follow the trend line pattern, and also considering the market structure and also the confluences, other confluences I'm going to be talking about. You could have placed your stop loss somewhere above here and consider your take profit all the way down, all the way down. And from here to here, let's measure the pip. Let's know how many pip movement the market would go. Okay, let's see. If you had taken, if you had maybe put up a sell from here, and then probably it's just stop loss just slightly above these candlesticks up here or the wick up here, our take profit could have been somewhere like here. You see, a whole lot, a whole lot. If you had taken our take profit, maybe consider our take profit up to this area, guys, this is 204. Let's say we take profit around this zone. As much as 223 pips. If you had placed a trade, and be so confident, put your emotion in check, would have gotten so much out of the market. So that's for this area. That's for this area, and the same thing applies to this other area. If you had placed a buy trade from here, the trade would have gone your way all the way up and continued. So a whole lot one would have made out of this trade. But the most recent one being this area, because this is the current what the market is doing currently. Like I explained before, the trade went, or the candlesticks went all the way down this area, retested this zone and continued all the way up. So this is our current area where anyone currently trading would have be would have been making money from this other area. So that's about the trend line. Then talking about the psychological levels. So I did mention earlier we have the main and the sub psychological levels. And by these main and psychological levels, what we simply need to do, okay, first of all, I consider psychological levels to be whole numbers. Whole numbers is actually the area or the zone or the round numbers where big banks, hedges, big boys decide to either buy or sell. For example, let me give a little example. On the norm, in our Nigerian settings, the market, supermarket, you go out there to purchase an apple. Okay, let's assume it's negotiable. Of course, it's negotiable in some areas. And they tell you that one apple is 17 naira or 16 naira, right? Now, what comes to your mind next? If you decide to bargain, what comes to your mind next? You probably would price 50 naira, because that's the nearest reasonable amount you can consider to pay for one apple. So whereby you're told 16 naira, 17 naira, you can price it lower than 50 naira because you know that it's reasonable enough if you pay 50 naira. So that's the same thing that happens in the Forex world. So big investors, bank hedges coming in to buy or sell, you know, this refers this reflects in the forex market as well. Okay, so a lot of them prefer to purchase at whole numbers or round numbers. So I'll go into that briefly for better understanding. Now this is exactly what we're going to do to draw out these psychological levels. Just root out your horizontal line. Root out your horizontal line. What we're looking for. Okay, you know that two six after 26000, we have 265000. The difference between the sub psychological level and the main psychological level is 50 pips difference. 50 pips difference. And why the difference between the two main levels is 100 pip difference. So let's check this out. Now, so once you click on the horizontal line, you go into the properties. You see style. Let's make the color. Yeah, this color is okay. Then test. So 26000 is main psychological level. So we title it main psychological level. Okay, then the coordinates 26000. these are whole numbers or round numbers, and these big boys, big banks, hedges prefer to purchase at this point, at this area. So it's far below. This is the first psychological level, 26000. Guys, I said whole number, round number, okay? So it's understandable to know that after 26000, the next number to consider is what? 265000. The difference between 26000 and 26500 is 50 pips, okay? So let's look for 26500. It's way up. It's this way, okay? This is 26500. This way. This way. So this is our sub psychological level. So at this point in time, we take out our horizontal line again to this point, click on it, and then work on what we need to work on. So for the sub psychological level, let's make the color different from the main psychological level. Let's make the color something like this color pink. Then we title it sub psychological level. Then for the coordinate, is 26500. Okay. Now we have main psychological level, we have sub psychological level, and again over here we're going to look out for the next after 26500 is 27000. So let's work on this one, guys. I will explain better. Let's just fix the numbers. 27000, this is another main psychological level, and the color is okay. So this is another main psychological level. After labeling all, then I'll explain a bit better. So we have how many sub now? Okay, main psychological level, sub psychological level. So this is how psychological level works, be the main and the sub psychological levels. So being that the big banks, hedges, the big boys usually prefer to purchase, either to buy or sell at whole numbers, like round numbers. So we the retailers, we also need to take advantage of whenever they themselves decide to buy or sell by tagging along. When they buy, we also buy. When they sell, we also sell. At that moment, we can generate higher momentum from the market. We have longer candlesticks, better movement, better peak movement, and we make much more profit out of the market. So it is whereby these big boys, banks, hedges don't maybe trade, they don't buy or sell. That's when you see the market consolidating. So for us, the reason why this psychological level is very important, like I explained earlier, using Apple as an illustration, is so that we can tap from them. Okay, for example now, on this GDP USD, which I've switched to because I've prepared this chart before now, I only had to explain with the first one I did, the first one I did for better understanding, so that anyone watching this video can know how to draw the horizontal lines, impute the necessary figures and colors and all of that. So now on GDP USD, you can see that this whole number, round number, 1.3000, okay, 1.3000. This one, when you notice that whenever price gets to this psychological levels, there's always a reaction that tells you that, hey, big boys are in the market. So all you need to do is to watch out for a buy or a sell by making use of your trend lines to understand when there's a trend line bounce, trend line breakout, be it partial breakout or permanent breakout, by understanding these things. So this is not enough. The psychological level is just one of the confluences. Okay, like I said, the four different confluences I make use of, to get my setup together before I take a trade, is something that all of them must be telling me to either buy or sell. So at this point in time, the psychological level being 1.23000 is simply telling me that, hey, there's volume about to take place. Okay, now let's look at what has happened, the reactions that have taken place so far around these psychological levels. You can see that at this point in time, the price went all the way up, right? The price came from here, went all the way up at a psychological level. It retested the area and continued its way down. For you to consider whether a psychological level we hold, there must be a retest, okay? There must be a retest. So if price come all the way from here, to this psychological level, indicating that a sell or buy is about to take place, there must be a retest. From here, if price goes up, it must retest the same psychological level before you place a trade. In this case, it's coming down. It has to retest the same psychological level and you can place a sell trade because it's going all the way down. All right. So at this point, you have your take profit here to take. Okay. And it can go as much as down to the other psychological level. It can go as much as down to the other psychological level. If it goes down this way, it will definitely test the same area and come back right up. So in this particular case, you get your take profit from this zone and price keeps going up again. Then when it got to this area, it came down to the psychological level to sell. And there was a retest. It retested the zone, came back up and went all the way down. Like at this time, it broke the other psychological level, the sub-psychological level, went further down, like down, completely down. It went down like completely. So when it got to this other psychological level, when it got to this point, what happened? It broke it, retested it, price retested it, retested the area. And what happened? Went into a buy trade, continued to make its way down. So there's always a reaction at every psychological level. All you need to do is to watch out for it. There must be a buy or a sell trade around those areas. But like I said, it's not enough to hold on to before you place a trade. So when you consider your psychological levels, also consider your trend line, your support and resistance. Okay, consider your chart pattern in the sense that you watch out for the W's and the M's when the price is in the W form. When the chart is in the W form, it simply tells you that price has hit your trend line like twice. W is U twice. So it simply tells you that the price has hit your trend line twice or your resistance twice, and at the third time it's likely to break through. It's likely to break through, so you can decide to buy from there. And when you consider the M, it also tells you that hey, price has gone like twice, hitting your support zone, and you have to look out for a sell because the third one coming might break through. So all these things has to be in place. You have to put them in check before you place a buy or sell trade. So I hope you've been able to understand what we mean by psychological levels, be it the main psychological level or sub psychological level. I also know you've been able to understand trend line. Trend line is all about connecting two or three tops or lows, two or three tops, peaks or lows or trough to determine what price is going to do next, whether price is going to form a W or M to at least give you some kind of signs or confluences to know if you have to take a buy or a sell trade. Then your chart pattern, you have to go to 4 hour time frame, daily time frame to know the overall market trend or structure before you come down to 15 minutes, 5 minutes to take your sniper entries, right? Good. And then the chart pattern, that's the W and the M. So all these things, they need to be in place before you consider taking a trade. I hope I've been able to communicate to anyone out there watching this video, and I hope to make better videos than this one using the PC versions, any moment from maybe a few days from now, so that I can really be able to, you know, explain better without having to use this phone version. I know this phone version has limited a lot of things, and I believe the next video I'm gonna make, there will be much better understanding. Okay, so thank you guys for today. I don't intend to make this video lengthy. However, I believe this video will be able to reach out to as many people out there to help them on their success in their forex career or journey. Thank you very much, guys. Thank you, and stay blessed. Please remember to subscribe to my YouTube channel if you haven't done that already, and consider clicking on the bell notification as well. Bye for now, guys.